You know, don't trade the market you want, trade the market that you have. In a lot of ways, I think we lost our way this cycle. The market will then punish those people for months. Bears sound smart, but bulls make money.
Hello, everyone, and welcome to Inside the Blockchain 100. I'm Karin. Blockchain 100 is a Binance initiative recognizing the 100 voices genuinely shaping the future of Web3. Creators, educators, builders. This show is their platform, and we're grateful to have Benjamin Cowen join us as a guest today. Benjamin spent years in academia studying mathematics and engineering before turning that same framework on crypto markets. He runs into the cryptoverse, and his whole thing is pretty simple. He looks at the data and he tells you what it says, even when it's not what you want to hear. Then, welcome to Blockchain 100. Thank you so much for being here today.
Yeah, thanks for having me. It's a pleasure to be here and to talk about the markets.
Let's start with the big picture. A lot of people, of course, expected 2026 to be a major bull year for crypto. Then we saw Bitcoin drop 50% from its October high. When you look back at that data now, what do you think most investors got completely wrong about the cycle? And why were they so confident that they were right?
Yeah, I think a lot of people thought that there would be a certain rotation out of Bitcoin into other altcoins once the cycle top was in, because that is what we've historically seen. However, Bitcoin tends to operate very cyclically, and this cycle is the first end of a 4-year cycle where Bitcoin topped on apathy rather than euphoria. So if you can throw my screen up, I want to show kind of how the market topped out. What you'll see is that the purple line was this past cycle, and then the green line was the cycle before that one, and then this yellow-orange line was the cycle before that one. What you notice is that they all topped within a week of each other. This cycle topped on day 1,062. The last cycle topped day 1,059 as measured from the low, and then this 2 cycles ago topped on day 1,068. So the market actually topped when it always does. And then if you kind of extend it out to the next cycle low, the bear market arrived when it always arrives. Historically, Bitcoin has topped out every Q4 of every post-halving year, Q4 of 2013, Q4 of 2017, Q4 of 2021, and now Q4 of 2025. What was difficult, though, I think, is that this cycle was different in the sense that we topped on apathy rather than euphoria. And I have a chart that I can show that kind of helps people to visualize that. So this chart shows the price of Bitcoin, and then it overlays social interest, right? So it's looking at people that are subscribing to crypto YouTube channels and various crypto analysts on Twitter or X, crypto exchanges on X, and crypto layer ones on X. And what we see is that in 2021, there was a lot of retail interest. In 2017, there was a lot of retail interest. And when there's a lot of retail interest, after Bitcoin tops out, then you have what people call altseason, where altcoins go up a lot for a few months. We didn't have that this time. And the reason we didn't have it was because Bitcoin topped, but on apathy, right? It topped on a lack of retail interest rather than a lot of new people coming in and FOMOing into the market, and it creating this like massive blow off top. So the only other time in history where Bitcoin topped on apathy rather than euphoria was 2019. Now, 2019 was not a 4-year cycle top, right? It was a mid-cycle top, but it also topped on apathy. And when Bitcoin topped in 2019 on apathy, there also was not a rotation into higher risk assets. And so it just kind of raises the question, why? Why did Bitcoin top on apathy rather than euphoria? And I think it has nothing to do necessarily with crypto per se, but it has more so to do with monetary policy. And if you look back at 2019, it was under very similar liquidity conditions and macroeconomic conditions that we see today. And I just want to show 2 quick charts to kind of show people why it's similar. One of those is the business cycle chart, right? So you can actually create a pretty cool chart showcasing the business cycles. And this is outside of crypto, right? This goes back forever. We know that the the economies go through business cycles. And what this chart is, it's the S&P 500 divided by the unemployment rate squared times US interest rates times US inflation rate year over year normalized by the money supply. And what you'll see is that you can visualize each business cycle. And in 2019, the only other time Bitcoin topped on Apathy, you can also see we were off the lows. If you look at liquidity conditions, this is based on things like policy rates, yields, the dollar strength, central bank liquidity, and funding stress proxies. From a liquidity standpoint, this also looks like a late business cycle environment. And again, and this is why this cycle has felt so different than every other cycle. It's because of where we are in the business cycle. And in order for things to change, we need to see liquidity conditions come down. We need to go through, basically the bear market that we're currently in.
You made a comparison with 2019, and you're also saying that kind of the only condition where we see the improvement is if the liquidity comes down. So if we compare and look historically at 2019, how did the market play out back then? And do you think it's going to play out similarly this time?
Yeah, I mean, I think it is playing out in a very similar way. Like if you look at the chart for Bitcoin here, what you'll see, if you throw my screen up, what you'll see is that Bitcoin topped here in 2019, and just like it did in 2025. And what's interesting is if you overlay, say, the balance sheet of the Federal Reserve, what you'll notice is that in 2019, Bitcoin topped 2 months before quantitative tightening ended. And then this cycle, it topped 2 months before quantitative tightening ended. And so the balance sheet's going up is good. The problem is it's not going up fast enough, right? Just like it wasn't going up fast enough in 2019 to really get us out of this bear market. So what I think is happening is that Bitcoin is in this slower downturn, right? It's in this slower downturn where the market is generally trending lower. But because we did not have a euphoric top, we don't have all the composition of retail investors that are here. They're not really indicative of short-term retail interest. The people that are here probably also were here 4 years ago as well. And so it's more so indicative of a relatively lackluster top, where then you put in slightly lower lows and slightly lower highs. But I think that this drawdown period coincidentally happens to correspond to the normal drawdown periods that Bitcoin normally gets in midterm years. So there's two ways to look at this, right? One way is to say, well, what if we're just in a normal bear market without the major crash right after the market top? I think that's relevant. And what's really interesting is if you look at the year-to-date ROI of Bitcoin, we're not even measuring it from the peak, just measure it from the start of the midterm year. If you look at the year-to-date ROI of Bitcoin in 2026, this is what it looks like. And if you compare that to the average of prior midterm years, and you add on, say, one standard deviation, you'll see that we're actually generally tracking prior midterm years, right? We're tracking them pretty well on average. What you normally see is Bitcoin forms a low in February, and you can see this on the chart every cycle. I mean, this is not even just this cycle. This is now the fourth cycle in a row where Bitcoin forms a low in February 2014, February 2018, February of 2022, and now February of 2026. And then after forming a low in February, it then tends to form a lower high in March, say March 2014, March 2018, March 2022, and now going into March 2026. We then tend to see weakness going into April. The markets might stall out for a little bit going into the summer. You might get some counter trend rallies. But usually the market generally trends lower as the year goes on. Now, we could make the comparison specifically to 2019 and say, well, what if it's not like 2022 or 2014 or 2018? We can do that. And if we make that comparison, it is tracking it generally, right? You can see that it's been a series of slightly lower lows, slightly lower highs. We're finding support kind of around the same area we found support at back then. After basically a 50% drawdown. And what's really interesting is back in 2019, Bitcoin found support at around $6,000. And today it's been around $60,000, right? So it's kind of And in 2018, it found support at around $6,000 too. So history has a way of repeating itself. And even in 2013, Bitcoin topped at like 124, 126, or 1,000, like 1,200, and then the cycle it was 120,000. And so you see a lot of similarities in how these moves ultimately play out. And when Bitcoin put in a lower high in March 2014, it was $700. This time it was a little over 70,000. But what I would say is, in general, while it is possible that we followed this, back then we don't really know how this would have played out because we ended up getting the pandemic, right? We had the pandemic and we had a major crash because of a black swan. I don't really think we can use the pandemic as an example of what has to happen. But what I would say is that it wouldn't be that surprising if there was some type of scare, would say a contraction in the United States within the next year or two, just because of all the weakness that we're seeing, in the labor market. And the Federal Reserve is now somewhat timid to want to cut again, despite the fact that we just had negative 92,000 in non-farm payroll. So the labor market's weakening, but the problem is that they can't really cut right now because energy prices are spiking. And so that puts us in a very precarious position where the Fed has a dual mandate. But when the unemployment rate goes up, you lower rates. When inflation goes up, you raise rates. What do you do if both are trending up? And that's kind of what leads to the crisis that then historically allows liquidity conditions to reset and for the business cycle to reset. So that's how I think it's going to play out. I mean, usually Bitcoin experiences diminishing returns to the upside, but it also has diminishing losses to the downside, which means that hopefully this bear market isn't as bad as the one in 2022. And the one in 2022 wasn't as bad as the one before, right? If you go through each bear market, you can see that the first bear market back in 2011 was about a 94% drop. And then the next one was about 87. The next one was 84. And then the next one was 77. So I think this one, to me, it makes sense to be about a 70% drop from the highs, plus or minus maybe about 5% or so. And if we get that, then a lot of the bottom indicators will in fact trigger, and that could bring the bulls back into the market. And historically, that happens sometime near the end of the midterm year.
So to sum up, do you still believe that the cycle exists? Because a lot of leaders in the industry are arguing that the 4-year cycle is that there is no longer the cycle, but what you're showing is, well, the opposite, that it's quite predictable.
Right. I mean, at least it has been, right? I mean, look at every peak: Q4 2013, Q4 2017, Q4 2021, Q4 of 2025. And as I showed earlier, right, when you look at the year-to-date ROI of Bitcoin on average, like it's tracking what it normally does in midterm years. But I think it's relevant to point out that Bitcoin does not have a monopoly on the idea of a 4-year cycle, right? Like 4-year cycles existed long before Bitcoin did. There's often a lot of debate. What causes the 4-year cycle? Is it the halving? Is it something else? I'm not saying the halving has no effect, but what I am saying is that the S&P 500 doesn't have a halving, right? It doesn't have a halving, but you can see that it tends to also find lows approximately every 4 years. So look in the 80s, 70s, 60s, and 50s, you had a major low in 1982, and then you had another one in 1978 and 1974. And 1970 and 1966 and 1962. And you can just kind of keep going back, 1958. So markets, for whatever reason, like to bottom approximately every 4 years. Even in recent times, people that have been here in recent times, you'll see that we had a low in 2022. We also had a low in 2018. Now, because of the recession in 2020, we ended up having a lower low. And you can kind of just go back and see how approximately every 4 years, there is a major low in the market. It's not just a Bitcoin thing. It's just that Bitcoin tends to sniff out this weakness before the stock market sniffs it out. And maybe the reason it is because it's more closely tied to liquidity. There's not as much passive flows that go into the cryptoverse. Like there's not like as many with stocks. There's all these 401ks, and people just kind of passively putting money in there. Crypto, while there's people that do that, there's not nearly the same magnitude of people that do it. So you could argue that Bitcoin responds quicker to changes in liquidity conditions than perhaps the stock market does. But the way I see it is the 4-year cycle is still very much alive. and Bitcoin topped when it always tops. And historically, it goes into a 1-year bear market. And, we're probably about halfway through that bear market right now.
When it comes to your method and kind of the data focus and technical analysis, how does it approach human behavior?
Well, what Bitcoin normally does in, say, bear markets is it actually spends more time trending up than trending down, right? Like it generally trends up and then it'll just quickly break down very, very quickly. The bull market was the opposite, right? In the bull market, we would generally trend down and then break up, right? It was the opposite of what we're seeing today. And so I think there's a lot of emotions associated with this because in the bull market, we would trend down and then break up and not really give people time to pivot. Trend down, break up, trend down, break up. But then in October, that changed, right? We pivoted to trending up and breaking down, trending up and breaking down. And so the emotions that come with that are essentially, there's usually, 3 phases to a bear market. And the first phase is basically when no one believes that it's a bear market. And then by the end of the first phase, you're typically able to convince some people that it's a bear market. The problem is they don't get the memo until after you've had a pretty big drop. And so what happens is they then sell the bottom and then the market trends up for 2 months. And it makes a lot of people that panic sold the lows buy back in, right? It feeds on their emotion, the fact that they sold the bottom and now the market's going to go up to new all-time highs without them. And then it goes up just enough to bring those people back in. It gives them a false sense of security, and then we crash again. And then what happens? People then panic sell there too, right? You can see it. People, at 80K, then at 60K. And so what happens is after you get these wicks down, the market will then punish those people for months before perhaps going back down to where they sold. So I think it's important to remember that in bear markets, we spend more time trending up than trending down. And also in bear markets make fools of both bulls and bears. So you can be a bear in a bear market and still feel like you get wrecked because the market will have these crazy rallies to the upside. So I think it makes sense to deal with the emotions by, there's 2 things you can do, right? What I do is in bear markets, I still hold some Bitcoin. I don't hold as much as I would in the bull market. I still hold some. And by holding some, it allows me to not have the same type of emotional response as if I held none, right? The other thing that I do is I just try to look at the chart, stick to the data and be like, look, it's playing out exactly how it always plays out. And look, at some point, I'm sure the 4-year cycle will break. I'm not under the impression that it's going to go on forever, but I think it's easier to defer to the 4-year cycle until it's proven wrong, rather than try to be the person constantly predicting when the 4-year cycle will change. Because if you think about it, to the chart we showed earlier for the stock market, I'm sure there were people back then through the 50s, 60s, 70s, and 80s that said the 4-year cycle would break. And it didn't break until 1986, after 3 decades of working. So it's not that it won't break, it's just that you're better off deferring to it until there's evidence that show otherwise. And I think that also helps deal with the emotions.
What crypto narratives do you think investors will look back on in, say, 2 years when we're looking back at the charts, and then they would realize that they were completely wrong?
So I'm actually a big believer in narratives following price, right? So I think that when a move happens in the markets, anyone can go back and look and figure out a reason for quote unquote why it happened, right? But then later on, no one really remembers it. As I pointed out earlier, Bitcoin bottomed in, say, February of prior midterm years. It then rallied into March and then went lower as the year goes on. Could I even remember, what the narrative was in February 2022, 2018, and 2014 that that allowed Bitcoin to find a low and then rallied into March? No, because I actually think narrative follows price. I can't remember what those narratives were. But the problem is that same narrative could have been said 6 months ago, right? We could have said, oh, well, there's institutions, there's the ETFs, there won't be a bear market. But yeah, Bitcoin dropped anyways. So I think it makes sense to be careful about focusing too much on narratives because they sound good, but markets price things in far in advance. I think it's more important to remember that narratives follow price. And I'll give you one more example. In a few years ago, the Ethereum ETF launched, and it ended up marking a local top for a long time, right? For many, many months. When Bitcoin's ETF launched, it had a local top for just like a couple of weeks, and then it went to new highs. But because it ended up marking a local top for Ethereum on the day the ETF launched, then the narrative pivoted over to, oh, it's going down because of how weak the economy is and how much uncertainty there is. But had Ethereum gone up after the ETF launched, like Bitcoin did immediately or within a few weeks, the narrative would have just simply been, oh, it's because of the ETF. So we can always find a reason for why things play out in a certain way in hindsight. In a couple of years, when we look back on the Bitcoin's price action in 2026 and wonder why it ended up being a bear market, which is what I think it is. What will the narrative be? I don't really think you need one, but if you force me to pick some, I would just say, just rising global uncertainty is a good one. Also, there's usually every cycle, there's usually a few bad actors in the space. And then those bad actors basically go to zero. And I mean, I'm sure, I'm not going to mention names, right? But there was plenty in 2022 that went bankrupt. And they went bankrupt because of very bad business practices, right? Very, very bad business practices. The problem is that when Bitcoin gets its first drop at the beginning of the midterm year or at the end of the post-halving year, those businesses are already hurting. We just don't know which ones they are. And then usually by the end of the midterm year, they rise to the surface because for a few months, they might be able to hold things together, right? And kind of limp along for a few months. But as time goes on and the price of Bitcoin continues to drop and the price of altcoins drop, that's what then kind of brings the froth to the surface. And it's actually a good thing that it happens, because if it didn't happen and those companies were allowed to exist for longer, then it could lead to even larger drawdowns, right? Much more panic-driven capitulations in the future. Think about 2022. I mean, 2022 was a difficult year with all the large companies that went under. Imagine if we didn't have that bear market in 2022. All those companies that went under would have still likely been operating today, but yet their books would still be awful and they would only have attracted more people. So the bear market, as it goes on, I think it will kind of bring some of the companies that are not as sound. It'll expose those companies, and then they will end up being blamed for the reason for why the bear market ended up playing out. But you could argue it was gonna play out either way.
If we're looking at the current market, at the current bear market, what narratives or what trends in crypto do you think will not emerge in the same way as they were before the bear market?
I mean, I don't really think there's as many like new retail investors this cycle. So I'm not really looking right now for a major capitulation. I mean, like we could have Bitcoin go to like 50K or 40K, but I'm not looking for like a quote unquote like the big one at the current moment. And so I think right now the crypto market is essentially going through a sort of this maturing phase where the investors as a whole are having to come to terms with the fact that the future of crypto should not be meme coins. I'm not saying that meme coins won't always exist. There probably will always be some, but in a lot of ways, I think we lost our way this cycle, and we focused more this cycle on how do we get more money into the market rather than how do we make crypto better, right? This cycle was all about, the meme coin super cycle narrative, strategic reserves, and ETFs. That's like all people cared about. And it kind of took away the thrill of like, how is crypto going to change the world? It was more so focused on how do we get more money into crypto? So I think the narratives for 2026 the reasons why the super cycle won't play out, the reasons why the 5-year cycle won't play out, is just because, first of all, because what it always does, but also like there's been this massive misallocation of capital for the last few years. And when that happens, Bitcoin just punishes people, right? Like it makes us remember what's important, and it brings us back to what started the whole thing, and that was going back to Bitcoin. So I do think most of those narratives will ultimately fall flat on their face. And when we look back, we'll just kind of see this as the year where we had to have these growing pains to ultimately make the asset class healthier. And if we can do that by going through this phase and by getting capital to be more properly allocated, it might actually bring developers back to the cryptoverse, right? And the thing is like I've known a lot of developers in crypto, and a lot of them left for AI at some point. And the reason was because they felt like their developments, their work wasn't being rewarded. Like they would work on stuff for a couple of years, and then some meme coin would launch on some Tuesday and outperform that project's complete returns. So I think that's an issue, right? It's not the way things have been for the last few years doesn't necessarily attract people to want to build, right? Like it's hard to want to build when people just care about meme coins. So I think this is the reason why these narratives will play out, why the super cycle narratives will fail. And then overall, when we look back on this phase in a few years, I think we'll be like, yeah, like it was really important we went through that phase. It was really important that we matured as investors, and then hopefully the asset class can be stronger in the future.
Well, and having said that, what do you think is the future of meme coins in 2026?
I would say like 99.999% carry out the 9, however far you want. I don't know how many millions of coins there are now, but they're all going asymptotically to zero against Bitcoin. And this is something we've seen happen over and over and over again. A lot of coins will do well against Bitcoin for like one cycle, maybe two, but a majority of altcoins end up going asymptotically to zero against Bitcoin over long in a period of time. And if you think back to 2013, I remember meme coins, even back in 2013 and 2017 as well. And most people don't even know what they are anymore because we just moved on to other things. The problem is that this cycle is like all anyone talked about for the most part. And so we kind of lost our way. So I think most of them will go to zero because they have fundamentally zero value, right? There's no value in them. And in a late business cycle environment, which is where we are, that's what happens. And the reason why it's a good thing is because it forces the people in that space to then focus on other things that are more productive for society, right? Like it's not productive for society for just someone to just sit in their basement and launch meme coins all day and try to get people to buy their meme coin before they rug them, right? That's not a productive thing for society. But in a late business cycle environment, all that stuff generally goes to zero. I'm not saying you won't have meme coins in the future. I'm just saying that most of the ones that exist today, people won't even know. We won't even know what their names are in 4 years. Like no one will know. Like the next generation of crypto investors, if you gave them a list of, say, the top 100 meme coins this past cycle in 4 years, they probably won't recognize like 98 of them. So I think most of them will trend to zero. That's not a bad thing, though. It's actually a good thing for that to happen because it shows that the asset class is healing.
As you mentioned, like a lot of developers do feel somewhat frustrated with the crypto market, and that things in the crypto market need to change for us to move forward. So how do we get more people into the industry and into crypto?
By developing actual use cases that people feel like they can't live without. So I think what needs to happen is the industry needs to build something that makes it so that retail investors can seamlessly integrate it into their lives, and they feel like, they feel like they need it, right? They rely on it because it's something they find valuable. It's not just something that's just sitting in a wallet somewhere, right? It's where they actually find it. And I'm not really talking about Bitcoin, right? Like, I mean, there's Bitcoin and there's crypto. But for crypto, there needs to be something that actually provides utility that that doesn't just appeal to very niche users.
But what kind of sectors do you think crypto needs to tap into to achieve that?
There's already people launching websites where AI agents hire humans, you know? And I think that in the future, there's probably going to be a lot of AI agents, and a lot of these AI agents will need humans to do things for them. Like one example that I saw was, an AI agent was tasked with sorting all these, like finding all these different restaurants and then, getting reviews for them. And one of the restaurants didn't have any reviews. So I literally made a job posting and had humans go to the restaurant and provide reviews. And then it paid those humans. I think crypto could be an integral part of that. I mean, I think it would make sense if the crypto industry and, transactions could occur on the blockchain, because it's a lot quicker than what you would find in traditional banking. And I think that makes a lot of sense to me. So I think tapping into that would make a lot of sense, but not tapping into it in the sense of just like naming your company, putting AI in your product name, but it not actually have to do with that, but actually being, what we use in the future. And I think that's already starting to happen with stablecoins.
What is one principle you think investors should hold onto during volatile markets?
I would say one principle for the long term, so not in the short term, for the long term, is that bears sound smart, but bulls make money, right? That doesn't mean bears are always wrong. They're usually right in midterm years. But over a long period of time, bears sound smart, bulls make money, and it's better to be optimistic over the long haul than pessimistic, right? Like the richest people in the world are not short selling. Like they're the people that we're building and we're bullish on the future. So I would say just try to have like a long-term view on the market.
Thank you so much for this conversation, Ben. I really appreciate that you joined us today.
Yeah, thanks for having me. It was a pleasure to be here, and hopefully we have better times in the cryptoverse coming soon.
Well, more conversations like this one ahead. Stay tuned and see you next time.